Okay, everybody, it's me, Gregory Mannarino. This is my post-market wrap-up on this Tuesday, December 10th, 2019. I have a lot to cover with you. I'm going to explain something to you that you really do have to know about. But let's start off here with the basics. Number one, an extremely volatile day on Wall Street. Stocks finished slightly in the negative across the board. It seems that the market does not like the fact that the president is not going to be raising tariffs on China, just like I explained to you would not happen weeks ago. I explained to you this was a setup, what he was doing, the narrative that trade talks are going well when they're not, the narrative that everything is just great. It was all a scheme to push off tariffs. The president does not want to raise tariffs on China. It will hit the markets, and his number one goal above all is to keep stocks moving higher. It's his most important agenda. So, again, we had White House Chief of Staff Mulvaney today, again, come out with the narrative that a phase one deal is close. They can't break out of it. It's an incredible situation. The narrative must be pushed down your throat. It must be maintained, despite the fact that we have heard the same story recycled over and over again for over 2 years. And Tariff Man, the man that believes that, who tells you, or was telling you that we are taking in hundreds of billions from China in the tariffs, he was told to stop. Because it's not true. The lie has been exposed. They want you to forget about it. But he pushed that narrative for months. We are not taking in a single dime in tariffs. Not one dime. As a matter of fact, we're losing hundreds of billions because of the trade deficit. JP Morgan today came out warning that if President Trump does not get a deal with China, doesn't look like there's one happening anytime soon, the U.S. economy is going to take a bigger hit than it's already taking. Again, service sector in free fall, manufacturing in free fall. They are fist feeding you the fake numbers with regard to employment, unemployment, the labor force participation rate. Those in the workforce is lower today than during the Great Recession, but you're not supposed to know that. Let's talk about a few other assets. No surprise to you. Cryptocurrencies under pressure. Metals did nothing. This is where we are here. Now, the fact today that this market did not gain is on the news that the president was going to, the president believed that the market was going to respond in a positive way. You saw what happened to the futures. Stock futures were down triple digits. All of a sudden, pre-market, the story, and it's fake too, all of it's designed for a specific outcome. Oh, we're going to delay tariffs. He knew this. The president has known he's not going to put tariffs on China since he said it. He doesn't want to do it. China knows it. The market and the American people were promised a deal. The fact that stocks did not go higher on this good news proves to us all that these fake narratives, the propaganda is just going to go so far. But that's not going to stop them from reintroducing over and over and over again. Phase one deal soon. Deal happening tomorrow. It's tremendous. It's fantastic. It's stupendous. Over and over. It's not going to stop. But the market, again, it's the law of diminishing returns. The fake narrative, the king of fake news himself, who tries to call out other things as being fake. It's a joke. The king of fake news himself, he's starting to lose his clout with the market. Proof today. But again, a lot of effort is going to be made to keep the narrative going. Now let's talk about, again, other assets. Crude oil did catch a bid. No surprise to you if you've been following this blog either. Look, everything I've been explaining to you has been unfolding exactly like I said it would, and I'm telling you these things before they happen. Now that's why I'm going to tell you about this here. Let's back up to just yesterday. Yesterday I explained to you that the Federal Reserve, we haven't seen anything yet with regard to the collusion between the White House and the Fed to explode the debt, to weigh more debt on the backbone of the United States of America. Our country is failing. But this is the end game. The Fed now has the best person they could ever want in the White House, doing everything right to increase the debt. The more debt that gets piled on, the higher the stock market's going to go to a certain point. Now, I explained to you yesterday, we haven't seen anything yet. Now, let's back up again several months ago when Fed President Bullard explained that the banks needed capital. Do you remember all that? You see, these hints get thrown out there. We listen to these things. Most people, it just goes right over their head. So what happened about 2 weeks after Bullard said banks are needing more capital? They got recapitalized right under the noses of the American people, just like the quantitative easing that's going on right under the nose of the American people. They have no idea it's happening, but it is. So the banks got bailed out just a few months ago. This entire quantitative easing, like we have never seen before, worse than 2008, is in full effect. But that is just getting started as well. So let me explain this to you. The banks, the Wall Street banks, are about to get massive capital injections. Without it, this entire thing, this entire illusion is going to get very real. Now, what do we know is going on right now? The banks are involved in repurchasing agreements. Let's cover that real quick. Why are the banks involved in repurchasing agreements, lending each other overnight with the promise to repurchase what they've loaned out the next day, overnight, plus a premium? Let's not even discuss the premium, okay? But that's how it works. Now, why is this happening? Several reasons. Number one, it gives the illusion that there is more liquidity in the system. Believe it or not, despite the fact that there are trillions and trillions of dollars, they don't even exist. They're not on the elemental chart. These are digital assets. There's only $1.4 trillion actual printed cash existing on the planet. The rest of it isn't real. Okay. Now, even with that, the banks are involved in these repurchasing agreements to give the illusion that there is more liquidity in the system than there actually is, to the tune of hundreds of billions a day. Add it up over an entire month. Add that up over the last several months. It's in the trillions, just like I've been explaining this to you. Okay, so the banks are involved in this repurchasing scam to give the illusion of more liquidity. It's not there. You understand? This is why the Fed is about to recapitalize the banks. It can't stop. We've reached the point where the acquisition of debt must explode much, much greater than it is now just to maintain where we are. So this repurchasing agreement has a twofold effect. Number one, it gives the illusion that there's more liquidity in the system, there's more capital. Number two, it forces the extreme short end of the real yield curve lower, so the yield curve gets a normal slope. You understand? The effect of this, capital moves into the stock market. It's fake. It's an illusion. It's not real. Again, if the banks were not involved in this repurchasing agreement, number one, going back to the yield curve, we would have the most inverted yield curve in history. The reason why they need to keep the illusion of a normal slope is because most people understand that an inverted curve is a clear indication that we are moving into recession. We're in recession now, going into the greatest depression that has ever been seen. Now, So we got this repurchasing thing going on every night, hundreds of billions of dollars. Yield curve has a normal slope because of it. Again, it's the very extreme short end of the curve. Now, why? Why? What are they doing? Why is more capital going to be injected into the system? More debt in an unprecedented amount. Why? Because they are trying to prevent a credit freeze. Like I've explained to you since time immemorial. This is it. You don't hear about it, but this is the true reason behind why the banks must get recapitalized, why the Federal Reserve is buying all the debt, why the banks are involved in this repurchasing agreement, giving the illusion of more liquidity. Again, even though there's trillions, hundreds, quadrillions, if you want to add in the dollar derivatives, it's not enough to keep the system propped up. It's not enough. This is why we are marching into a credit freeze, people. And what does that mean? No cash. No transactions. Everything locks up. It stops. We had this in 2008, but the capital injections at that time were enough to free up the credit markets. This time, there is no stopping it. This time, what we're seeing now should demonstrate to you how desperate they are to prevent a credit freeze. The repo scam that is going on. When was the last time you heard the president talk about that? When was the last time you heard the president explain to you that the Fed is pumping trillions of dollars into the debt market? You never hear it from anybody. Not the Democratic hopefuls, not the president. They can't say it. They've been silenced. Don't you understand? This should make it clear to you who runs the show. It's the central freaking banks around the world. You're not allowed to know the things that I just told you. The things that I just told you, if you understand them, count yourself among probably some of the smartest people in finance on the earth. People don't get it. They have no idea what's going on. And even if they do, the Fed is involved in a repurchasing agreements along with the banks. Okay. They have no clue. They don't understand why it's being done. They don't understand actually the multiple reasons why it's being done. Again, to keep the short end of the curve suppressed, the illusion of a normal yield curve, forcing cash into the market, the illusion of more liquidity in the system. We're drying up. We are drying up. Okay, so forget about a stock market crash or an economic meltdown. We're going to just stop. When transactions freeze and that's it, what do you think is going to happen on the streets outside your house, no matter where you live? Let me give you another clue. This is going to be a global phenomenon this time. Global. Transactions around the world are going to stop when this happens. So you can expect the unlimited, again, it's perpetual, this repo scam, because that's what it is. It's a scam to give the illusion of liquidity, a scam to give the illusion of a normal yield curve. Once again, they're going to have to increase this even more, much more debt purchases from the Fed, more debt on the backbone of the United States. Are you a real patriot? Then you should care, not these dog shit fake YouTube channels out here calling themselves patriots. You gotta be kidding me. They're sick in the freaking head. Every one of them. Not one of them has a clue as to what I just explained to you. No, President Trump is gonna save the world. Not one of these Democratic hopefuls, not the moron, President Trump, who's playing right into this, calling for negative rates here in the United States. He said it many times. It's an incredible situation, people. Wake the freak up, okay? I told you already, we lost. We've let this happen. And there ain't no stopping what's coming down the pike. Zero. So get used to it. All right, look, before I keep going off on the deep end here, I think this video has been important. If you understand these concepts, start talking about it. Share this video. Get it out there. Do you now understand why these banks are involved in repurchasing agreements? Do you now understand why President Bullard saying the banks are demanding more be recapitalized again? Why all of this is going to get monumentally worse? We haven't seen anything yet. Nothing as to what's coming down the pike. It's incredible. It really is. All right, with that said, I'm out of here. See you tomorrow. Love you a lot.